Mitesh, welcome to Super Investor. It's great to have you here.
Me, yeah.
And I think you'll be focusing on valuations in your panel while you're
Yes.
here. Tell me about that and what you think the current situation and state of play is.
Yeah, well, I think we've been through a period of public market volatility, and invariably when you see public market volatility, I think there's always a lot of scrutiny around private market valuations. And so that's always been, I think, the subject that we'll certainly speak about later today as well. But when you look at the market in 22, you obviously saw the public markets drop off quite considerably. Most investors expected a re-rating in the private markets, which really didn't happen, as our data shows. And I think that points to the resilience of private market valuations, which we can further talk about. But I think some of the questioning and the scrutiny that we heard earlier in the year has slightly abated since the public markets came back up. You saw the public markets back up about 7-8% earlier this year. I think the Nasdaq was higher and private markets came up a little bit. So I think it's still an important topic for LPs. I think the pressure has slightly come off, the scrutiny slightly come off, but I think it's still looking at GPs to give utmost transparency into their valuations. And so I think where the increased focus may come is a bit more around the kind of cadence and the frequency of valuations. I think there's a little bit more of an eye on that. So looking for transparency there.
Tell me about that. What would you say the current state of relationships between LPs and GPs is because of valuations?
Yeah, I think it's always a question, right? And I think there's more queries around kind of how GPs value. I mean, lots of LPs will be used to seeing, to some degree, different views on valuation, sometimes around the same assets in their portfolios. And so there's always a question of kind of how the GPs thinks about that. What is that source of value? We know that valuation is an art, it's not a science. And so it's really understanding what does that valuation journey mean for GPs. And again, that need for transparency, both in increases in valuation as well as any falls as well. So I think it's really transparency and more disclosure around that, I think, is the expectation.
Having described it as an art rather than a science, you've got to have fairly expert teams to be able to even begin to do that too.
Yeah, exactly. And I think, this is where I think a number of groups would like some kind of view of around independence around that. And some LPs themselves will take some independent views around that, which is more potential around direct investments. But I think in portfolios, that's a bit more challenging, but definitely more sort of verification around the views around valuations.
You mentioned the word resilience. Tell me more about that and what you mean by that and where you see that being in the current environment.
Yeah, I mean, on the whole, private markets have remained very resilient when you look at the valuations, and I put that down to sort of 4 core reasons. So look, number one, I think if you look at the sector mix with which private markets have generally been exposed, it's very different to public markets. I mean, look at the public markets in 2022, not everything fell. Actually, most of, if you look at the S&P, for example, 30% of underlying companies actually went up in value. So those falls were really driven by a few large, particularly tech companies in particular. So when you look at the kind of sector mix of private markets, more exposed to some of the sectors that have done well, think healthcare, think consumer business services, less tech and sort of IT, less exposure to this kind of sectors that haven't done so well. So I think that's the first core reason. The second reason I would say is private markets generally were always valued at a discount to, I think, where the public markets were. So generally there's a cushion to eat into. And so as the public markets came off, I think there was that cushion to eat into. I think what you really saw was more of a convergence in valuations. I think thirdly, generally private markets have just done better. As we look at our data on revenue and earnings, private market assets have generally done better. And why is that? We just think it's a better, more active form of governance, more alignment in interests. And so we do generally think that private markets do better, and the data shows that. And then lastly, just look at where exits have happened. I know exits are more challenged a bit more today, but where they have happened, they tend to happen at a premium to the most recent marks. Our data shows that even over 2021 and 2022, your average premium was a 20% to where the private market investor or the private market GP held that valuation 4 quarters prior. So that's really the proof in the pudding that we think is an attestation to the valuations are not unfair. Fundamentally, private market valuations rely on long-term fundamentals, and I think public markets can show short-term irrational behavior and emotion. And I think that this is where I would point to that resilience.
Yeah, the long-term resilience, if you like. And with all of that in mind, what do you expect to see over perhaps the next 12 to 24 months?
Yeah, well, I mean, again, look, any public market volatility will always bring scrutiny on private market valuations, but I think fundamentals are what matter here. Even where we've seen some multiple compression or fall in what the GPs are using for their marks, I think we've generally seen that offset by underlying company performance. I think the one area that potentially to bear in mind is some of the increased attention from some of the regulators. Just look at the FCA in the UK, for example, potentially looking at an exercise where they'll look at some of the valuation approaches used by GPs, and I think there'll be more attention potentially around that. That could be a risk. I mean, potentially around the lag effect, for example, of valuations in private markets, and are GPs hiding something in between those sort of quarterly marks? I mean, some still mark semi-annually. And so I think there'll be more attention around this, but that could have quite a profound change should there be a change in the kind of cadence to look at these. So I think a few things to keep in mind, but overall we do believe in the kind of resilience of private market valuations.
Good, glad to hear it. Thank you so much, Mitesh. Great to hear your thoughts.
Thank you. Thanks for having me.